Welcome back. Well, my next guest says the recent rotation was sudden and aggressive. It makes fundamental sense. Let's bring in Dan Suzuki. He's Deputy Chief Investment Officer at Richard Bernstein Advisors. Dan, welcome. And do you think it makes sense because things were looking frothy to you, or the valuation piece Deirdre and I were just discussing?
Yeah, I think it's actually a lot that Deirdre was discussing just now. I mean, on one hand, you have these valuations that got crazy extreme, and she pulled up the chart that showed that it's very correlated with the yen carry trade. It's also very correlated with financial conditions, and so you can clearly see that those elevated valuations were driven by a lot of speculation. Now, that was supported also by strong earnings, but I think the issue more recently is that those earnings are starting to slow, and as earnings slow, it's harder to sort of beat expectations, and you've seen a lot of volatility on the back of that. So I think that what you're seeing ultimately is a fundamental earnings rotation, and that's driving the market rotation that you've been seeing, Kelly.
It sounds like a healthy one, in other words. On a day like this, where do you jump to action?
Yeah, I think clearly, there's a rotation out of the expensive crowded names. Now, the question that investors are struggling with is, what do you rotate into? And I think there's really two options. You either rotate into sort of cheap cyclicals if growth is going to hold up well, or you rotate into the more defensive safe haven assets. And you can see even just throughout the day, there's been a little bit of back and forth between the two. We started off the day with really the defensive sectors and assets holding up best. But as the day has moved on, you're actually seeing the cyclical sectors are actually sort of gaining the lead. And I think that's something to take note of. And I think that going forward, if we're right, you are going to continue to see this broadening out of earnings growth. And I think that supports that rotation to some of the cheap cyclicality.
Oh, and as ever, we are so data dependent. I wonder if part of that, what you're describing today, is because the ISM services data held up okay. And then you look ahead, okay, every time we get jobless claims or, something to that effect, investors are trying to decide, do you go defensive or do you go cyclical?
I think that's exactly right. The market is a shoot first, ask questions later market. And so we had the data last week and they're selling off. You get the stronger services data, the market's sort of rallying back or recovering a little bit. I think that's something that we're going to have to live with. But ultimately, even if we are going into recession, which I think is possible eventually, we have to remember that outside of those pandemic-like shocks, it's really like death by 1,000 cuts. So even if we are going down that road, it's going to take a long time. In the meantime, earnings growth is actually holding up pretty good.
Can you give me any more granular examples when you say small cap? What is deep cyclicals and emerging markets other than China?
Yeah, so I think if you look from a sector perspective, industrials, which is, I think, the best performing sector today, energy and materials, which are outperforming, small caps, I think, are also going to see some of the biggest earnings acceleration over the course of the next few quarters. And I think that's also true with respect to broad emerging markets, which, with the exception of China, just recently saw the bottom in earnings growth. And that's actually got a lot of room to run as well.
So energy, industrials, materials, those are what you consider deep cyclicals?
Yeah, that's right, Kelly.
Interesting. And then outside, so when you look at Japan, just kind of bring us full circle to where we started, Peter Bookvar said on a day like this, he buys Japan. I don't know if you guys have a view on what happens there.
Well, clearly, when something sells off this dramatically, if you want to trade it, some of the biggest gains happen on the back of the biggest loss days. But, I think for us, we were heavily overweight Japan for a while. We actually more recently went to a big underweight in Japan because from our earnings fundamentals perspective, we think that their earnings cycle is actually is peaking out and more likely to shrink going forward. And that, given combined with all the positive sentiment around China and the yen policy uncertainty, I think it's more of a risky trade relative to some of the other areas.
We've ended with disagreement. We was trying, and that's what makes a market. Dan, thanks for rounding it out for us today. Really, I think I appreciate it very much. Dan Suzuki from Richard Bernstein Advisors. He is the Deputy CIO.